actually going to be doing today. We're going to be taking a look at gold, what it did, and how we can learn from what happened. So I actually would have created my analysis on gold. I tend to go very, very extra on my analysis. On any pair that I'm trying to analyze, I tend to go very extra because I like to be thorough. And you can see here where this is kind of what I wanted to see. Now, keep in mind the level, right? So we're looking at this here, and this is what I expected. I expected price to get up to maybe 24, 25, maybe 24, 28, and then drop. Now, I want to explain why, right? And you can check out all of this if you go to my profile. That's literally my profile handle there. You can check out all of this because I do post a lot. But the entire idea was surrounding the fact that, first things first, yes, gold is a bull market, but when we look at what happened from this point onward, from the double top or the M pattern, yesterday I got shit from somebody saying it's called a double top, not an M pattern. You could call it whatever you want, it doesn't matter. What happened from this point onward was the catalyst that would have caused gold to continue to drop today, in my opinion. So the M pattern is a suggested bearish reversal pattern, which means that after you see an M pattern and it is confirmed to be an M pattern, what would typically happen? The market would continue to drop once it is confirmed. Now, after that, we find a new bearish momentum. Now, keep in mind, gold is a bullish market. However, when we look at what's going on here over the next day or so after the M pattern, the day or 2 days after, it has gone into heavy bearish momentum. What I use to trade, in my opinion, I use momentum. I need the market to be in a state of momentum in order for me to be able to get into a trade in the first place. After that, those 2 days, the market would have shifted into a state of consolidation. Consolidation, it can also be known as accumulation. What does that mean? Accumulation can be known as the accumulation of orders, where traders are getting into the market in hopes that it's going to continue to sell. Traders getting into the market in hopes that it might bounce and turn back to go bullish, but they are getting into the market without understanding that this is one of the market cycles. So it went into a state of consolidation, and that consolidation lasted about maybe just about 3 days or so. At the high of the consolidation, which will be right here, right, and we'll go to the chart shortly. At the high of that consolidation, there would be traders interested in sells again because again it was bearish, right? It was bearish from that M pattern to present, which would be the consolidation. And then when we look above that consolidation, the last major area where sellers might have been interested would have been this, in my opinion. But why? So when we look at here, we look at here. This is an area where right above this, buyers would have become interested. But then when it came back to here, as soon as it broke back below, we know sellers would have been interested below here because of the bear market or it shifting into bearish momentum. And then as soon as sellers got in right here, stop losses would be anywhere above here, thinking that this is now a safe haven. So my thought process was very simple. I would expect price to stop on the sellers here in the consolidation, even stop on the sellers here in this last major seller area, and then drop. And the reason why I would expect a continued drop is because, again, it is shifted to go bearish. Now, a big question a lot of people tend to ask is, how could I know that it's going to continue bearish if it's a bull market? Right. And that's a good question. We have to understand the way that the market functions. The way the market functions is it needs a certain amount of money injected in order to make a certain type of move. So if the market wants to make a move up, it has to go down first to grab the orders of the buyers who are at a lower position. I hope that makes sense, right? So what I'm insinuating here is, in order for this gold market to go back bullish, it has to go bearish first, because we know that along this bull move here, all inside here, here, and here, there'll be other buyers who probably still trying to hold their positions. The only way that the market makes sense to buy is to get rid of these buyers so that the market can buy freely and safely. So let's take a look at what happened. So we have the same level here. So I'm going to draw back. I actually removed all the drawings because I actually thought the analysis was wrong, right? So I have the consolidation here. I have the M pattern up here, right? I have the bear momentum here. And then I have, last but not least, the zone right here. All right, let's make sure that that's what it looks like here, right? So that's exactly pretty much the same thing, just different colors. So you have the same thing here, right? M pattern, you have the momentum, you have the zone, and then you have the consolidation, right? And then I was expecting, remember I said about 24, 28, maybe 24, 30, right? And I did say that. So about from here to here, 24, 28 to 24, 30, right? Let's drag that down. Now, what I really anticipated was something like that. That's what I anticipated. So it went just a little bit higher than what I would have liked it to do. However, I mean, if we count in stones here, you had to admit this is a pretty strong analysis, because the idea actually did play out how I wanted it to play out. And had I had the opportunity to get in, I actually thought the analysis was wrong, and that's why I said I ended up leaving home, go on an errand, and when I came back, I saw this. Had I had the opportunity to enter, I would have, and I would have been right. Now, is this hard to do? Is producing an analysis like this hard to do? No, it is not. You are actually most of you listening to this, if you're still listening to this and I'm not boring you, most of you who are listening to this are very, very capable of doing what I did here, producing an analysis like this. But I'll preface this and tell you that most of you listening to this do not want to do this, because most of you listening to this want to take the easy way out. Most of you listening to this want to actually do it in such a way where you just do no work and get all the money. But that's exactly the opposite of how you're going to function here. The only way to actually make money in this game is to actually do the work. What is the work? Is the work trading? The work is not trading. Is the work back testing? Not necessarily. Is the work managing the trade, or is the work putting a stop loss on? Neither. The work is trying to do the analysis to understand what exactly it is you're looking at. So I really hope that you understood where I was trying to go with this. I love, love, love breaking down trades like this. Absolutely love it. Anyone who has any questions, you are free to reach out to me directly. If you have any questions, you can reach out to me directly on Telegram at t.me/Brandon Evo. You have any questions or the things that you don't understand, or you want verification on, or you want to go deeper on any topics, you are welcome to message me here. All right. I hope that you have a good rest of your day, and I will see you guys very, very soon. Have a good one.